regulations will define the future shape of the crypto ecosystem over the next couple of years. The policy stance will, of course, vary. Mindful of the purported benefits of this emerging ecosystem, certain jurisdictions will seek simply to better frame it. And of course, wary of the systematic risks, others may strive to tame it. And in the race to become a global hub or for other geopolitical motives, a few may try to game it. Hello, everyone. Welcome to the Analytics Insight podcast, where we explore the cutting edge of technology. And I'm your host, Priya Dayalani. Now, after a year filled with pleasant surprises for market participants, the cryptocurrency space is set to make more waves in the coming years. Higher acceptance of cryptos in traditional finance thanks to spot ETFs, the rise of stablecoins and security tokens, and more interest in blockchain service providers like decentralized finance. All of this are set to build an even more exciting 2026. Of course, the US elections and a new administration that highly favors crypto markets add another favorable factor to a soaring industry. But is it really all good? Let's welcome Manhar Garegrat, Country Head, India and Global Partnerships at Liminal Custody, to dive into the regulatory challenges of a sector evolving at high speeds. Hi Manhar, how are you doing?
Very well, Priya. Thank you so much for having me on today's conversation.
Great. It's a pleasure to have you on our podcast today, Manhar. And definitely crypto is one such sector, is something that the more you talk about, the less you feel that you're talking about it. And with the regulatory space evolving in order to make crypto more acceptable and more accessible, there is also another side of the regulatory challenges that I think it's very less discussed. I think we'll be doing that in our conversation today. But before we dive deeper into our core discussion, let's give our listeners a basic idea or more about liminal custody. So, if you could help us understand more about the company, its specialization, it would be great.
Sure. So, if you look at the history of liminal custody and the original team, the initial team, large part of the team members basically have been ex crypto exchange folks. Okay, our founder, he himself was the CTO of one of India's largest exchanges, that is Zeppe. And what that did is, because we were running exchanges in different capacities, each one of us, we saw firsthand all the challenges that come to a business which is trying to run a digital asset operation at scale. Okay, because nothing says scale more than a crypto exchange. You have millions of users, you have thousands of tokens, you have so many wallets, you have billions of dollars of volumes being transacted on a daily basis. So exchanges are basically all about scale, right? Now, when you handle that kind of scale, you really deal with a lot of complexities, right from small things that make a difference on a daily basis, all the way to the large things like security, compliance, and then even regulations, right? So I think all of us, as part of the early team at Liminal, we've had a lot of deep dive into all of those challenges, and that is where, in a way, Liminal was born, to try and make those challenges easy or to abstract out those challenges for newer businesses. And crypto exchanges still have an understanding of blockchain tech, and they are native blockchain industries. But what happens when you bring in the traditional finance folks? What happens when you bring in enterprises? What happens when telecom companies come into crypto? What happens when government institutions come into crypto? They will not have all of the benefits of that exposure, of that understanding. So the idea was that let's build this company that basically transitions or helps all of web 2 transition into web 3, and be an accelerator or a catalyst for that journey.
Great. That's really insightful, Manhar, and thank you for sharing and helping us understand that how liminal custody is redefining the entire digital asset security with a strong focus on compliance and innovation and helping newer businesses to deal with the challenges when it comes to scaling the entire exchange platform. And I think that truly sets you apart in the rapidly evolving landscape. Let's dive a little deeper into your role now. Manhar, you are an accomplished business leader with a distinguished track record in driving growth and spearheading strategic initiatives in the digital asset industry. So, can you tell us more about yourself? How has your journey been till date, and what exactly is your role and contribution towards the company?
Sure. So, in the early years of my career, I incidentally happened to be a part of the traditional finance industry. So, I've worked in insurance, I've worked in stockbroking, and in the traditional sense, there's a lot of things that the industry has, evolved over the years. When I say a lot of things, I mean a lot of processes, a lot of best practices, a lot of risk management, techniques, a lot of technology improvements. They've also, of course, had their own journey of, over decades where they've seen a lot of challenging situations, and they've evolved through those journeys to today, what we see as the capital markets of the world. Right. So being a part of that industry and really trying to understand what are the ways or what is the mindset that these regulators have. So we used to engage actively with both IRDA as well as SEBI. That mindset is extremely important, and the reason for those kind of thought processes, the risk management practices, the aversion to risk, the conservative mindset, the fact that you want to put 20 hurdles and make things more difficult is very counterintuitive today for a lot of technology folks, because technology is all about making it super easy, removing all the hurdles. At the same time, compliance regulations a lot of times becomes more about adding hurdles. I'll give you a very small example. If you're trying to withdraw funds, if I ask you to, not just put your password, also do a 2FA, also have a cool off period, also have just 24 hours, limited amount that you can withdraw, etc., etc. A lot of times these hurdles tend to be seen as really cumbersome, and they tend to be seen as challenging. It's just inefficient. But in times of crisis, if for example if your account is hacked and you have all of these hurdles in place, you will realize that the damage that's happening to you is much much lesser, and you can actually arrest that transaction from happening. So that mindset basically has given me a very interesting perspective. When I finally came into crypto about 5 years back, we started realizing that here is this technology that's going to make things super easy and super efficient, right? And there's a lot of discussion about that, how crypto is the future, how you can do P2P payments, and how it's the cheapest, fastest, most efficient way. But that's not all. I mean, you don't just walk, with the technology leg. Somewhere that technology leg also has to be balanced with how is that entire transaction and that financial environment, how is that kept safe? How does it protect the lowest common denominator, who is your average citizen who does not understand how to create a blockchain based wallet, or how to do a crypto transaction, or what is gas fees, etc., etc., so on and so forth. Right now, until you build a system that solves for this least common denominator, you are not going to get mass adoption. You are not going to be able to take this technology and deliver its benefits to the larger masses, right? So then, you have this fantastic piece of technology. What's the point if only a few folks who really understand and who are sort of the geeks, if only those people are able to use this technology and transact within each other? That doesn't really solve the problem. So this is where, I think I aligned really strongly with Maheen Gupta, who's our founder at Liminal. And when we decided to, after working in traditional finance, I actually worked for crypto exchanges in India. I have worked for Zepe, where I have done the entire the sort of GTM for Zepe out of Australia, which was a 0 to 1 journey. And then I sort of supported the entire journey of creating a new brand from scratch, doing the websites, doing all the marketing activities. One more sort of interesting piece of trivia here is that crypto and marketing was always very difficult. In the traditional world where I was used to doing marketing, you had access to channels like Google, Facebook. You could run ads all around. You could do a lot of activities, meta ads that most people run today and do a lot of business with. That's all open to you in the traditional world. But in crypto, both Google and Facebook would not support any ads. So even legitimate businesses that really wanted to reach out to people could not. because a lot of folks had done a lot of scams and misused the advertising channels. So I did that journey, understood the technology, got the benefit of working very closely with some really big names in the industry. And, as they say, I got a view of the crypto industry from the shoulder of giants. And I think that really accelerated the understanding for this technology. And I was able to really grasp what this was going to do to the world in a very short span of time. And once your conviction is built about this industry, then it's easy to sort of keep building within the space. From ZepPay, I moved on to CoinDCX, which happened to be a masterstroke because just 20 days after I joined CoinDCX, the Indian market opened up. That the Supreme Court verdict came that the RBI banking ban was disproportionate, and that was sort of quashed. Once that happened, India opened up with CoinDCX. It was just a matter of just shifting gears and really scaling the company up, and we managed to scale. So when I joined DCX, we were a team of about 35, 36 people. By the time I left CoinDCX, we were about 750 people. So we saw a really, really massive, in a very short span of time, about 2.5 years, we saw a massive growth curve. So that journey was very defining. That basically took me from marketing to HR to finance to legal to compliance and then to policy, primarily because crypto was very, very new. You couldn't find compliance folks who had a knowledge of crypto. You couldn't find legal folks who had a knowledge of crypto. It was also difficult to find finance folks who would understand the subject. So a lot of those things we, along with the founders, as part of the founders office, I had to sort of look into. And just the fact that, we were really not just building one function, we were essentially building a business, and we were actually building a market by actually going to the government folks, by actually going to different stakeholders and working with them to create legislation. Whatever legislation you see in the country today in India, we have had some or the other involvement in that, right? So again, so that's been the journey so far of not just building the business, but also sort of developing the India crypto landscape as a whole.
Definitely, Manar. Thank you for sharing that, and truly and absolutely a wonderful journey you have been. And it's inspiring to hear how your role has evolved and the impact you're trying to create within the organization, and of course the entire crypto landscape in India. It definitely gives our listeners a great understanding of the work happening behind the scenes. Let's build on that and talk a bit about the regulatory landscape of crypto. Now, the world of cryptocurrency and blockchain technology has been nothing short of revolutionary. In just over a decade, we have witnessed the rise of over 11,000 cryptocurrencies, each with its own unique proposition and potential. This dizzying or pace of innovation, however, has outpaced the development of appropriate regulatory measures, which is leaving the industry in a state of uncertainty and ambiguity. So, how do you view the current global narrative around the global crypto regulation? And why do you think that regulation alone isn't enough to address the security challenges of this space?
Sure. It's very interesting because history has always proven that you will always see that technology will move fast and then regulations will catch up, right? And we have seen this, if we look closer, even in our country, across many, many industries. I have come across this example of ride sharing because of a very dear friend, who worked closely with Uber. So in Uber, when ride sharing was launched in India, there was a challenge in terms of regulations because Indian regulations, as far as cabs are concerned, would mandate that you have to have a meter inside the cab. Now, for a Uber cab where your fares are being decided on a mobile app, the driver has a mobile, you have a mobile, there is no real need for a meter inside the cab. This piece of regulation became a hurdle, and this became a very annoying sort of hurdle that they had to overcome. So regulations will always have some or the other complications with technology. That's history, and the same thing has sort of happened with crypto as well. Crypto is even more complex because in a ride sharing or in an OTT industry or in say any other industry, you have limited overlap with your life. But in the crypto industry, the overlaps are so huge. You're talking about money, you're talking about finance, you're talking about assets, investments. These are very, very important aspects of human lives. And, there's a lot of overlap there. So obviously, the technology and regulatory complication will be much deeper here, and there will be a lot more problems to solve. So that is something that we were prepared for since day one, right? Once you understand why the regulators have to do things a certain way, you're not bothered about, oh, they are not doing this, they are not doing that. I mean, you just sort of, you don't go with that kind of a mindset. You realize that yes, this is deep, yes, it has large overlaps with very important human aspects, and yes, it's a completely new paradigm. A cryptocurrency today can act as a currency, it can act as a security, it can act as a commodity, it can act as a utility token. So a single thing can have so many different shapes and forms. So how do you try to create regulations or frameworks that can govern all of its forms? And now how do you apply that globally across multiple countries? So this is anyway, going to be a difficult situation. So, but having said that, what we are observing is that there is a lot of progress. And in fact, it's much better than or much faster than one would have anticipated, especially with the developing nations. The understanding always was that the developing nations will take the lead, the developed nations will take the lead. So you had Australia, you had US, you had UK, you had large parts of Europe, Japan, etc., moving forward with the technology and running with it. And then you would see developing economies come in. The interesting bits have been countries like UAE, countries like El Salvador, or smaller countries which have accepted crypto in a very interesting way. There are a lot of interesting regulatory interventions that have happened in Indonesia, for example. In Malaysia, they tried to come up with a framework. Taiwan is working on something. So a lot of countries across the world are building their frameworks. They are all being wary and cautious in their approach. Many of them are very excited and they've gone all out. That's of course a smaller number. For a country like India, because of our large population size, because of the complexities that are unique to us as a nation, I think we've done all right. We've not done poorly, I would think. We've done well. We've got very important interventions in place. We've got a lot of, like the FIU registration, for example, is a great step that we've taken in the country. The ASCII regulations, advertising standards that we've put together, that's great. We have a very, very onerous, a very punitive tax framework, but we have a tax framework nevertheless, right? Which is fairly comprehensive. I filed my taxes with a lot of crypto transactions this last year, and it was a breeze because in my IT portal, there's a separate section for reporting VDA assets. I simply have to connect my tax, compliance person, my profile tax tool. I just have to compute everything and then plug it in there, and everything gets done. So we've seen, I would not think that we have not developed the regulations. The pace is definitely slow. The approach is definitely cautious and measured, but it's there. And the way we see it, it is inevitable. The regulators themselves are also really looking into this, and they are also trying to wrap their heads around how to create this framework. Their job is probably the most difficult job today, and we completely empathize with them. In the same breath, we also continue to urge them that please sort of to understand the technology, wherever possible we work with them to explain everything that we understand from the technology standpoint, and we're happy to sit with them, to work with them, to figure out how to really solve the complex challenges that come along with this technology. I would just put it at that.
Absolutely. And that's a really insightful perspective, Manhar. And I mean, I really liked your point that you mentioned that regulations have always have some sort of the complications with technology. And I think that's where you're spot on about how regulation is just only one piece of the puzzle. What often gets overlooked is how technological innovation or what kind of proactive security frameworks we also need alongside with the evolving industry that we are living in. And of course, it's a never ending journey. There is a lot of progress that we need to do. And in terms of India, like you said, we have done pretty much well. And I completely agree with you on that. And it's just that we really need to have that mindset that as and when the industry is progressing, we also need to evolve ourselves and our role, and how we are stepping up our frameworks in terms of strengthening the security from within. Moving ahead, when we're talking about the security of the crypto landscape, I think no system is truly unhackable. Now, specifically for cryptocurrency, it already operates in a hostile environment, one where security must be assumed fragile and constantly under siege. Now, for example, developing a secured wallet involves far more than just storing keys. It requires assembling an interlocking system of cryptography, software engineering, risk modeling, and a lot of other things that can withstand intentional subversion. So, if we step back from the regulations and other trends, what does building crypto security from first principles truly mean?
The fundamental principles will always remain the same, because wherever there are key assets, how do you have a complete overview on all of your assets? How do you ensure that you follow maker checker systems? How do you ensure that only the right kind of access is given to the relevant people? And then how do you ensure robust processes that take care of people moving on, that take care of things changing? Your day-to-day business is very dynamic, and things keep changing on a regular basis. So how well do you account for all of those? How strong your processes in general are, how disciplined you are as a business, and how focused you are on security as a business. I think these are some of the fundamental principles, the first principles that will remain. On top of that, what I would like to sort of speak about is the blockchain and the cryptocurrency angle present very, very interesting, new vectors to overall security. Okay, so it's very important to have a very deep understanding of how blockchain systems function, of how assets derive their value, how they are held in these wallets, and how can how the private key system works. This understanding itself, while it may seem fairly straightforward and on the face of it very obvious, but this itself is something that really needs to click in the mind of the security person who's sort of in charge of everything. You really need to understand the big difference between your traditional systems and your blockchain based systems. And one very big distinct characteristic that differentiates both of these is one simple fact, that in a traditional system, you will typically have a lot of data, right? You may have a lot of information, and this information can be accessed, can be stolen, can be hacked into, data can be taken out of the system. And then, typically a hacker will reach out and say, if you want this data, then you pay me X amount. These are what we typically call ransomware attacks. In the blockchain world, they don't need to extract any kind of ransom from you. If they've entered your system, they are actually going to take the asset, the money, the value out immediately. It's not like they're going to take out something that is valuable to you and then, ask you for money in return. They're simply going to just take the value away in that first instance. The second most important distinction is that your blockchains are basically public blockchains, where majority of the asset and the value, the tokens are, that is all put on a public ledger, which is openly accessible to anyone, right? So there is now suddenly a whole lot of information about this infrastructure which is accessible to everyone, the good actors as well as the bad actors. Now, the bad actors, therefore, whoever is going to work hard enough to really dive deep into this data and really look at monitoring wallets closely, surveilling people, and then the moment they are able to link that wallet address to your real profile, or to your real, to your social media profile, or to your real existence, they have it now. They have the access to the value, they have access to you. They can try and socially engineer you, get into your systems, and then access this entire big pot of gold, that they know exactly how many gold coins are there in this particular wallet, right? They already know it. So these are some distinctions which make it extremely difficult in this space. Then third differentiation would be the fact that this system now works on smart contracts, right? Programmable money, what we call. So smart contracts are also a very new technology, and typically in other code systems, we have seen years and years of open source codes, and we've seen years and years of patches working, and collective learning, as we call it in open source parlance. There's a lot of collective learning that's happened in the traditional space. Now, in terms of smart contracts, also we've had learning, but that's been there for a limited amount of time. So there can be more zero-day attacks. There can be things that we did not think about. There can be all of those challenges. So that is the third sort of aspect. And maybe the fourth one can be quantum as a whole. While quantum as a whole presents a challenge to everything, not just crypto and Bitcoin and digital assets, but to all of our systems in general. But with the public blockchain systems, there is always a consensus, and there is a dependence on the community to try and sort of build solutions in time for these kind of challenges. So that remains a question as to whether the Bitcoin community will be able to come together and will be able to sort of deploy a fix in time for the quantum threat whenever it comes very close, etc. Will the community be divided? Will it be together? I would think that's the only real challenge. And as we've seen historically, they've always worked together in the interest of the larger piece. So we will see that also playing out. But broadly, these are the core differences that I can sort of think of. And it's important to really understand these deeply in order to create a secure environment for a digital asset infrastructure.
Absolutely. And I think it ties back beautifully to the idea that true crypto security isn't just about compliance or reacting to threats, but about designing trust into the system from day one. And it's really fascinating, how going back to first principles or certain principles like you shared forces us to just think beyond the surface. I think it's more about transparency, decentralization, and resilience as certain foundational values rather than just features. Now, on that thought, when we are trying to implement a particular crypto system, so it includes a lot of things. You have hardware devices, software, or even human interaction. Now, when you're trying to implement, we need to ensure that the particular crypto system is free from bugs and the hardware devices should work as expected. Unfortunately, human error poses a serious challenge in actual practice, and it is considered, a far more likely source of failure in crypto systems than other explicitly specified cryptographic challenges. So many of today's breaches happen not because of, just crypto typography, but because of human or operational flaws, I would say. So, how do you think the industry can bridge the gap between the human trust and technological trust?
I think that the simple answer is, education. As much as you can, make people aware and make them not just aware in the sense that, for example, I'll tell you what our team does. Our teams will actually run mock attack on different people within the company, because we also, of course, we are aware that these kind of attacks may happen. So we are extra vigilant, but then there are so many scenarios when there's a lot of work happening, there's 5 6 projects going on together, and those are the times when your defenses are a little bit not at their prime, right? So those are the vulnerable moments. So even within those kind of moments, to have these kind of discussions, or to just generally have a lot of discussion, a lot of conversation around what kind of security breaches are happening, what are the newest so a lot of hackers have started using AI, your LLMs, to try and, because a lot of coders now use AI to generate code. They're trying to inject malicious code through LLMs into businesses. So a lot of these interesting things will keep happening. I think as far as humans and security are concerned, humans are one of the biggest, the sort of the weakest links in the whole system. But then humans, of course, also have the ability to learn and the ability to stay vigilant and the ability to be on top of that. Beyond that, what one should also do is to have, checks and checks, just redundancies after redundancies after redundancies, as they say, backups of backups, and to ensure that no one person really has too much access. Your people processes are in place, your onboarding processes are in place, your offboarding processes are in place, your background verification processes are in place. I think these are some of the key things that you can do. At the same time, it's fascinating how we've seen some of these past attacks, and how the stories that we read about North Korean hackers, etc., how they infiltrate businesses, they apply for jobs, or how these people, they offer jobs, they create businesses where they lure DevOps engineers or engineers from various businesses to come and apply to them for jobs. Then they give them projects. They actually pay them money over years, build a sufficient amount of trust, and then they sort of infiltrate. Then they get into the infrastructure and the systems. So these risks are very real. I think knowing about them, learning about them, being curious about them, and then discussing them, speaking about them in the larger forums, within the companies, and ensuring there is adequate awareness. I think these are some of the few things that that we can do to stay ahead of the curve.
Definitely. And to wrap up our today's conversation, I think the crypto landscape has been a victim to skepticism, cyber threats, and financial crimes from malicious actors, regulatory developments, and many other ailments that could have put the industry to an end. Yet, its disruptive approaches and major advantages that it can bring to investors or businesses of all kinds, and even the everyday consumers have turned it into a resilient industry. Regulatory challenges might continue, but cooperation from regulators and entrepreneurs can make a massive difference in how crypto evolves. Thank you so much, Manhar, for taking out the time and effort to be on our podcast today and helping us understand that by keeping up with the crypto's quick pace shouldn't mean stifling its growth with overregulation, sometimes that we have seen in markets in advanced economies like the EU. But the best way to move forward is to ensure safety meets innovation, giving technology the space it needs to improve without putting users and economies at risk. So thank you so much for your time today, Manhar, and sharing some wonderful insights with us. It was lovely chatting with you.
Likewise, Priya, thank you so much. I had a great chat. Looking forward.
Great. Thank you so much, Manhar. So this is for our listeners. I hope you enjoyed today's conversation and gain more insights about the evolving regulatory space of the crypto landscape. Stay tuned for our upcoming podcast, and you can view all our previous podcasts on Spotify and other leading platforms. Thank you so much.